Welcome to another edition of Zach's Rank Buy. I am Brian Boland, and I'm the aggressive growth stock strategist. And I got two more stocks for your aggressive growth radar screen. Some big movers that just reported earnings. So let's go ahead and start out with the biggest one. It's why you're here. You want to know about Innodata. Innodata, INOD is the ticker. It's a Zach's Rank #1 strong buy. It's got a A for growth and an F for value. And if you're new to my videos, I always try to get this growth divergence. Growth investors, value investors are looking for different things. And the style scores, the Zach's style scores right here, tell me that I'm on the right path right away as the aggressive growth stock strategist. Okay, let's just take a quick peek here before we run forward on it. We can see that this was an earnings event, and boom goes the dynamite, as they would say, if you would say such a thing. Stocks really moved up higher here. We're at 1.3 billion market cap, where we're seeing volume increase exponentially. Next earnings is a long way off. Valuation is a little skewed here, but we'll talk about that more in a second. So what does Innodata do? Well, we see that they are a leading provider of content supply chain solutions. All right, we'll talk more about all of that in a minute here, but let's just go take a look at the numbers that we really care about. Are you beating the number? We didn't have an estimate back here, but I think that was a beat, and I didn't have an estimate there. I'm going to call that a beat. That's going to be an NA again, because it should be a 0. So a 0 right in there. Didn't miss, didn't beat. You met earnings expectations. But the most recent quarter was just the other day, and we have a 35-cent number versus 7-cent expectation. 28 cents is our difference, 400% positive earnings surprise. So what went on here, and what's going on into the future? Well, we've got estimates holding steady at 11 cents for this current quarter. And for next quarter, the same is true, 11 cents. This year is, I don't want to call it over, but 21 cents is the estimate for the year. And now next year, we've got finally started to see the estimate tick up 59 cents to 71 cents. You know, we are almost midway through November. We're not going to care too much about what's going to happen for this year. We're investing for what's going to happen next year. So that's why we're going to take a look at that. All right. So I guess we didn't have an estimate for sales for this year, so we don't really have a number, and we got 174 million for next year, and we don't see a percentage there. But we know that the quarter was super strong, and if we go to our valuation, this was the most recent quarter. They posted top line growth of 135%, added 5 of the Magnificent 7 as customers, as well as 2 other big data tech customers. So obviously things are moving in the right direction for this company. And, you know, as in the AI space, data is key. And I'm going to highlight this 215 forward earnings estimate. That's rough stuff. But, and, you know, so is this price to book, but it's an asset slim model. So we're going to see that price to sales, maybe not so terribly high. But here's your key between, you know, everything. So we had margins at 2.3%, then 2.8%, jumping up to 10.5%. You have expanding margins and gigantic growth, and a stock that is going to run out of control. That's what happens. And as we can see here on our price consensus, there wasn't that much earnings estimates in the past for this stock, and really not much going on here, just hanging out in that, you know, 5 to 15 range for a very long time. Then all of a sudden we post stellar earnings and the stock goes ballistic. All right. So it's definitely a name to keep your eye on. It's Innodata, up another 4% so far today on the 12th day of November. It'll about 11 a.m. Central Time, Eastern Time. I got to mention this stock is in my portfolio in the home run investor. I can't really do it right. So a home and then run investor. It's a service that I run here at Zach's, and come check it out. We bought it a little while before the earnings. So we're looking at some good gains on Innodata, INOD. All right. OneSpan. OneSpan is our next item up for bid here. It's OSPN is the ticker. It's a Zacks rank number one, and a very good growth divergence here. A for growth, D for value. OneSpan. All right. So what does OneSpan do? We can find out by coming over here. They provide software services and protect financial institutions from fraud, that sort of thing, and authentication services. So OneSpan, kind of that security services, software security in a way, but also authentication, business identification, making sure the right people are accessing your network at the right times. Who should be doing it? It's them. All right, so we can tell from this chart right away, this was an earnings beat at the end of October, and the stock responded properly to a solid beat. All right, let's check out the numbers that we love to see every time in one of these. Are you beating the number? Solid beat here, very solid beat here and a very good beat here. So we can see the percentages are slowing down. Outside of this looks like an abnormal quarter, but maybe that could be the result of first quarter when the banks and all that are kind of redoing their budgets. So we could be looking at, 2 quarters away from another outsized report. But obviously expectations have been moving up, for, as we can see on the estimates there. Beating the number is what we want to see. How are estimates moving now? Well, this is another one that's kind of flying under the radar. We don't see too much about it here, but we are looking at 27 cents for this quarter, no estimate for next quarter, and that could be the big quarter again, going back to the other year. But for the full year, we've seen our last 30 days, $1.16 up, and next year at 129, moving up to 148. So we like to see that. All right, let's go ahead and take a look at sales. Again, we're not seeing any sales numbers here, but pretty sure there's going to be good growth coming forward. Otherwise, we wouldn't be getting that A. So let's check in and our valuation. We're looking at a great PE multiple, only 13 times. Price to book at just 3.4. So 3 is your number that value investors tend to get turned off. But this low price to earnings multiple is pretty good. 2.7 times sales. Revenue contraction in the most recent quarter. But as we like to say, when margins are expanding like this, revenue could come in a little bit. It would be fine. So 4.3 to 13, we'll call it, to 16.7. That is margin expansion. I love to see it. Let's see what the chart looks like. Well, after this miss, it's just been straight beat. And the stock has just performed very well. So we think back to the pandemic and then all of that stimulus and then the tech wreck of 22. A little bouncy indecision action here, but we're getting our feet back here. The earnings in this chart implies we're going to go back to all-time highs up in the 30s. I wouldn't be a bit surprised if we get to 24 by the end of next year. So stock is looking good. We're at 17 and change, and it's OneSpan, OSPN. All right, that's it for this week. Be sure to join me next week when I take a look at 2 more stocks for your aggressive growth radar screen. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.